morning, Forex traders, and welcome to a new episode of the weekly Forex Outlook. This is your host, Sharif Bhat, founder of TrendFollowingFormula.com. In the weekly Outlook, we will go through the weekly calendar to get a clear vision for the financial week's terrain. We will then take a look at markets structure, viewing price action and correlation across currencies, commodities, and stocks. Finally, we will conclude with TFF's bullish and bearish list for explosive markets that we can easily consume with minimum confrontation and the maximum profit. So with no further ado, let's listen to this week's Outlook. Good morning, Forex traders. This is Sharif Bhat, founder of Trend Following Formula. Today is Monday, the 20th of February 2017. In Trend Following Formula, basically, our goal is to search for the most trending markets, the impulsive markets, the markets that you can really easily determine if they are in an uptrend or a downtrend, if these markets are going to move up or going to move down. If they will move up, certainly we are gonna long this market, we're gonna buy these markets, and we will be confident in and we have a lot of confidence in that. If the markets are moving down, they are in downtrends, we are gonna short these markets. We try as well to avoid the sideways markets, which are the markets that these markets that move in a choppy, undetermined sideway, where bulls and bears are actually in a fight and you don't know really what is happening. We need a dominant market that bulls are dominating or bears are dominating, and this is our goal here. That's why we are not going to be actually scanning Forex only or commodities only or stocks only. We are going to be always scanning all the markets, starting with the indexes that points to and explore and actually summarize these markets. If we will find a trending market, we are going to stick to it. Let's start today with the calendar, and as usual we will start with the most interesting markets, then the least, then finally we will conclude with the markets that we don't want to trade in. And actually we would recommend you to not join these markets because they won't give you the results that you are looking for. So let's start by viewing the calendar now. Actually, this week's calendar is very light calendar. As you see, nothing to worry about. We have only one information, one number coming on Wednesday. This calendar actually is tuned toward the most important news, usually news that are in yellow or actually green. These are less important. We are trying really to focus on the most important news that will affect the market. News usually are not the best tool to trade with. However, we want to look at them to define which are going to be the most volatile days through the week that we may expect a turn around, so we can take our profit around these areas or actually stop trading. It's not actually our trigger, because as you saw last week and the week before, usually the news come positive, the markets rally, and they come negative, the markets they come positive, the markets fall, and come positive, the markets come negative, the markets rally. So what we see in front of us is a week Wednesday, just FOMC meeting, and employment claim that's on Thursday, and crude oil inventory. Maybe through Thursday could be the day that some volatility may happen, and we need just to mark our calendar through the week, anticipating Tuesdays as a potential a volatile day. If we move very quickly to the chart, and as usual on our chart, we start with the dollar index. Let me just pull the dollar index drawing here. Yes, it's in front of us now. We start with the dollar index. As you see, we were speaking about that dollar index for a while now, and we had an interesting actually month through the past. Let me just change the color here. Close, done. Let's change the thickness of that pen so we can see it too. Perfect. We had a very interesting week, interesting month. Like as you see, the market have fallen in that down channel for the past month, and in that channel the market had a high, okay, and then it created a low, and then lower high, lower low, okay, lower high, and lower low, lower high, okay, and then lower low. Very, very, very interesting downtrending channel, as you see. Very interesting downtrending channel. And then it broke here, that nice channel, and this didn't actually affect us at all. We said we are gonna continue selling, but 2 weeks ago, however, the market continued to rally. We said that our stop is going to be above that area here, okay. This is, I'm gonna just turn off this one. Yes. So we said that that area here is going to be our stop loss, and that happened on that day, and we went out of the market. And we went out of the market on that day, and we said by this phenomena we had the first higher high, okay, lower high. What follows a lower high is a higher high, okay. So if we will have, just by having that, this means that the downtrend is potentially ending. No more downtrend. So if we were bearish on the dollar index, we aren't anymore bearish on that market. We cannot short it anymore. We need to sit down and wait. We need to wait. If that market is gonna prove to us that a continuation is gonna happen on the downtrend, all what we need to see is a lower low, okay. And if that lower low happens, we need to see a lower high, and then we will sell that breakout, and then the downtrend is gonna presume. If this happens, that's gonna be great, okay. So we know what is waiting for us. If this doesn't happen and another scenario unfold, which is going to be, okay, a low, okay, higher low, okay, then a higher high. So now we have a new uptrend, so we will buy. It depends on your setup. If you are a bullish trader, a breakout trader, you may actually trade that breakout here. If you are I'm sorry for that. That breakout is gonna be here around that area, so that's gonna be 101.7. If you are a bullback trader, you may actually want to have some sort of a pullback, and then you need to see a Fibonacci level, a candlestick, and maybe a previous high to support the market, and then you long the market. This is actually the trade that we usually like. We need to, or this is the way we actually see the market, we need always to have a confirmation for the trend. What is happening now on that market is nothing to do with a trend. Basically, this market, just erase all and show the pen again. As you see, the market haven't proved anything. It's now in a choppy area where you don't know where it is going. Is it an uptrend or downtrend? Certainly, if you would buy here, you will get stopped. You don't know what's gonna be your target. It's very short-lived. If you are shorting, you see that rally on Friday could have actually stopped you. So it's a very uncomfortable areas. There are traders who actually are using these long-term support and resistance lines. That system is interesting. However, I don't like that kind of hesitation. I don't know what is happening in the market. Look, if the market is falling, it's very strong. If you have a downtrend, look how the market is doing in very short time. These are the results of your trades. Very, very, very powerful, and you know where to wait for the market. This is like 50% Fibonacci. Here as well, it was 50% Fibonacci. You have a clear channel. Okay, here we had 50% Fibonacci, but the market didn't continue down. However, it did it many times before. So I'm not very happy about the conclusion of that. Sorry just for taking all the time to say the conclusion. My target, as you know, is to explain what is happening. I can give you a lot of fish. However, I prefer really to teach you fishing. So hide the pens and erase all. That market is not the market that we want to really trade. The dollar index. The result of that most probably we are not going to be trading any Forex markets, because if the US dollar is not really in a good trend, we will have non-trending markets in majority of the currencies, and we will prove that now to you by viewing the rest of the very quickly. The EURUSD, as you see as well, it's the same story. I'll put here our drawing tool. As you see, it was in an uptrend channel and then broke it here. We don't care actually about breaking the channel itself. It's just a graphical representation. What we want, it just gives us a summary for what is happening. However, what we care about is this, like low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. This is an uptrend. Okay, once it's broken, no problem at all. We are buying still. Buy. We bought. Okay, here buy. 50% Fibonacci, whatever. Buy. Okay, 50% Fibonacci, whatever. You see the market moves up and then retraces, moves up and then retraces, moves up and then retraces. However, we broke the previous low in this area, and this was our stop. Okay, for this long, we stopped here. Okay, so we had, you know, by breaking our stop, which is a very powerful technical stop. This is really something you need to take in consideration, that the technical stop is a trigger for your technical analysis, that market have stopped to become an uptrending market. That stopped, no more uptrend. So we have to wait. Okay, wait, because the future is unknown. We don't know what is going to happen in this area. It's really very hard to understand what is going to happen in this area. Okay, if you are a bullish deciding to buy that market, that's good, you are right. If you are bearish, you are right as well. So that is the EURUSD. Basically, we don't know. We don't know what to do in this market. So once you don't know, you don't trade. Hide. If you know, let us know. EURUSD, sorry, USDN. We said that the EURUSDN is the only market from all markets that haven't broke previous downtrend. Or we said that we had that nice channel. Okay, whatever. I don't want to really you traders to take that channel consideration. It's just a graphical line showing us and telling us about, you know, it's just a simple, it's graphical representation, because now traders are using these lines in trading systems, which is not really a good idea. What you need to really do is to understand the classical definition of a trend, which is series of the lower lows and lower highs. Lower low, that's a low, and this is a high. Okay, lower low, lower high, lower low, lower high, lower low, lower high. Okay, lower low. Actually, you know what? Lower high. This is the only market. Okay, certainly the US dollar is a part of that market. It's high. We are now on US dollar yen. Yes, certainly. Yes, there is the US dollar here. However, that market haven't done the same pattern as the one in the dollar index. We didn't have a higher high. So this market, we don't really need to trade all the markets as we trade the dollar index. However, it's a very important indicator. But some markets divert from this. This is the case on the US dollar yen. And we said that we are going to be short on that market, and we shorted that market here. Okay, last week, short. And we said that our stop loss is going to be around that area, which is 116.00. Okay, this is the area that we would have our stop. We haven't breached that stop. Now the market is moving down and there is some profit. If you haven't traded that market, you could have traded this market on this candle. That candle is just breaking this candle here. If we will just enlarge that drawing, hide pen, freeze all, and yes, just reduce it a little bit and show pen again. If you trade it, we said this is our stop loss. Stop. Okay, we entered here. If you entered after this candle, that's basically when you see this candle, you enter in the breakdown of that candle, the second day on this one. Okay, this is your trigger. This is a shooting star candle. Okay, and then because this is a trend following trade, what you need to do, you need to have just 50% of your position on the 100% move, which is like 112 level, and then an extended price projection at 110. Okay, this is the second target. This is T1, this is T2. This is the way the USD yen has to be traded. Basically, very simple explanation. Downtrend, have downtrend, trend 1 haven't been broken at all, and then a retracement on that, we shorted here. Okay, if you haven't done that, you could short here. That's correct. And then the market, this is your stop loss, and then the market has to continue as it done here many times in that downtrend. Reaction to 50% fib. Okay, you sell here. Okay, you reach your 100%. You take 50% of your profit. The market goes back. The second 50% have been here. Okay, it never breaks previous high. So this is the way you need to trade the dollar yen. Again, explanation is too long. However, hide pens and then erase all. If we move to USD British pound is really in jeopardy. Is not really the best. You cannot really decide what is that. Is it an uptrend? Is it a downtrend? It's very hard really to determine. However, if you look, that's actually, if we just give a summary, because we had in comments that you guys, some of you guys want to know what's happening in this. That's if maybe the best way is to look at it from a bigger perspective. Hide pen and then look at that. Maybe the weekly. Look at this. Basically, as you see, the market that's it. You see, it's creating, you know, some people call these boxes. It's creating these nice boxes. These boxes usually are continuation pattern. They could be as well flags. Flag. These are very, very complex sideways. What you need to play with is this area, like an area when the market breaks down from this, which is really brilliant. You know, that downtrend was very, very nice one. Now what we have is a sideways movement again. It's very hard to predict what to do, and erase all. It's very hard to say what is going to happen now. However, this is a channel. The market is moving between these two price levels. Okay, see up and might be down. Could be. I cannot guarantee that this is the down move now. I don't have any pattern here that explains to me what is happening. Yes, I could be relying on this. However, that resistance level, I'm not gonna be really the happiest person to trade in a channel like this. That price target is interesting. However, it's not certain. Markets, there are many other markets that we can trade. Erase all and hide pen. Now, if we move to USD Swiss franc, USD Swiss franc on the daily chart is the same story as the dollar index. It's like copycat. Uncertainty, we are not gonna be really trading that market. USD Canadian is a very bad market. On trend following formula, if we move to institutional insider spyglass, this is a very trusty tool. This tells us about the markets, what is happening, what institutions are doing. And as you see, the EURUSD is in bearish now. Institutions are selling, so it's high probability that the market might fall through the day. However, we don't really want to trade that market. There are times that we trade these markets every day, in and out. We talk and we call shorts, and markets really hit the targets. But now we have clues, but we are not certain because the direction of the market is not clear. There are other like gold is bearish, And this is the second thing that we are gonna move to now. I'm gonna talk to you about the gold, okay, which is an interesting. Silver is bearish, is sideways. Both bears and bulls are in equal. And if we come just back to the chart, we will have a very quick look at the gold. This is an interesting market. I like it. I spoke about this previously through the last 2 weeks, and I was insisting on longing that market, gold, okay? And no reason at all, except I'm just going to change the line color here into red again, so it's visible, or maybe magenta. So show pen, done. As you see, that market have never broke a previous low, never. On the shorter term, like higher, this is high, and then higher low, like, and then these interesting flags were forming, okay, and then created higher high, and then higher low, higher high, lower high. You see, this pattern is the one that you need to take in consideration and start. You should not trade off in that range. In this range, you should not trade. And this is exactly the same that we explained on the dollar index, when he said we need to have a certain pattern to cease trading, and if this pattern will change, it's gonna be a change in direction. Basically, when we broke that the lower high, we are in a potential of creating a downtrend. If the market went like that, created lower high and lower low, is gonna be a downtrend. However, this didn't happen, and we broke a high, okay, and we created higher high, okay. So whatever comes after that's an uptrend. This is an uptrend. If you would trade that breakout, it's a brilliant thing. Breakout out, that is a very, very good thing. If you haven't traded that and you waited for retracement, it's another brilliant trade. Buy. And we spoke about that buy last week. We said we should not short that market. A lot of people were shorting this market, but we said no, it's better really to keep this market, okay, to long this market. And then we had our first target around 1244. It's like, you know, few pips below the previous high. And then the second target, we might actually have an interesting 1300 level. We can easily have that. If we will look at this, I'll just clean this drawing. If we look at that as a potential flag pattern, this is the flag, see, and then this is the pole here. If we take this pole and we move it up here, that gives us a very interesting target. Okay, that's the target that we are looking for. So that's a very interesting market, and I would actually long this market. I have no problem at all. There is like a trend up, trend. There is an uptrend, and this is checked. Okay, we have close previous high, there is support, then support, we have candles, okay, we have Fibos, a lot of evidence to support that market. Would we lose in this market? Yes, certainly you can lose in this market if it doesn't really reach its target and then you know, get stopped here. Yeah, the market could lose, that trade could lose, and we could actually the market can turn against us, but the probability is very high. The probability is very high. Certainly, like if you will trade the US dollar now, yeah, you can win some or lose some, you don't know, but the probability, there is no higher probability in any direction. If we just hide the pens, and here is all, and then move to my favorite part of the market actually, which is the SPX. Now we are talking trading. I said to you guys, we are scanning the markets, we are scanning the Forex, we are scanning the commodities, we liked them, we hated the Forex, and we are scanning as well the stocks, and we love them. We love the stocks. I liked very much the US dollar, however, I love the stocks. Now, I don't love them forever. If they will turn against me, I will hate them. I will never, you know, I will never recommend them. Look at this. It's the same high, low, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher. That's a uptrend. This is actually, by today, this is all-time high. You know what does this mean? That a lot of traders, banks, everybody is jumping on this, you know, but unfortunately retail traders like yourself and many other small traders, they don't really know about that. They don't have a clue. They are busy trading the US dollar. Okay, this is very, very important. I would urge you to get into this market. Hide pen. Okay, trade that. These are higher highs and higher lows. These are really great. You know, you need to get into this market. Okay, what you want to see here are one or the second strategy. A breakout, what you need to do is a breakout is like, you know, things going like that, and then there is a high, there is a consolidation, you see, and then poop, something goes like that. You need to trade the breakout of that. Certainly you will have a lot of false breakouts, absolutely, yes, but in an uptrend the probability to have a correct breakout is higher, even if you are not really going to have I'm sorry, I'm gonna draw it in a better place because things are jamming. You know, you would have uptrend like that, which is like this, and then it consolidates like this, creates whatever you call it, flag box or whatever. When it pops up, you buy. If it popped up here and created a false breakout and then it came back, your stop loss is usually a previous low. Stop. Okay, so you will stay in the trade till it pops up. If you catch it here, it's gonna be great, and then you will have a nice, you know, target for the flag. Have a very nice target for that flag. Okay, this is the first one, or the second one is basically the market is moving up like that, and then it retraces back to a support level, and then you will have some evidence like candle Fibonacci, or something else like maximum, for example, a previous support. Okay, so this is the way you trade it. Let's move very quickly. That session actually took too long. Show erase all and then hide pens. Now let's look at the effect of this, the application on Apple computers. Wow, I have been talking about Apple and Tesla for a long time now, a long time, and these markets are gonna be, yes, you know, people are very busy trading US dollar, the USD Canadian, the whatever, and these markets suck. Really, but these ones are really beautiful. These markets are so beautiful. You see, that's an uptrend. Like it's never been broken, and it had some pennant, if you want to call it a pennant, and then it goes up to its target, and then again a flag, and then it breaks out to its target. And what it does now, it's creating another flag, and what you do, you just buy. You know what, you just buy. That's up trend. I don't care if you are a fan of Apple, if you hate Apple, it doesn't matter. Uptrend. Okay, this is something really need to take care of. If I will move forward toward Tesla, you will love that thing. Tesla is a very, very, very success story. Now, I don't care what happens. I don't care about the cars. Certainly, I like Tesla's cars, but now it's like that. Before, it was so bad. Okay, like maybe last year it was really rubbish, but now it's good. So you know what? Let's jump in. You know, the high, higher, low, and it's the same. Higher, high, higher, low, higher, high. Sorry, high, low, higher, high, higher, low. If anything is gonna happen here, is gonna be a higher low, because this relates to that, this relates to that. Okay, you really need to be careful. Relates to that, relates to that. You know, these are from that magnitude. Okay, these work together. Okay, and these little ones, okay, these little ones work together. So if this is not breaking previous low, okay, this is gonna be breaking previous low. So what you need to do is just look for any evidence that I presume was maybe 38.2% Fibonacci, could be, you know, and actually it just a bit above the gap. Buy. And hopefully we will hit a higher high, as we actually hit a higher high here, and as we hit a higher high here. Okay, as we hit a higher high here. Basically, that's the way it goes. So if we will just break, like this is our stop. That pattern, which you see in Tesla now, is repeating, and my job is to search for this higher probability pattern and to trade it. This is the only way that you can make money. Marrying into a certain stock or a certain Forex pair, or marrying in whatever trading instrument is bad. Sometimes, if you watch Gordon Ramsay's Kitchen Nightmare, people stay in their businesses in their for like 5 years, and the total debt is like 700, a million and a half dollars, and they stay there and they keep repeating the same losing formula. What we need to do is, once we see that restaurant is not performing well, we have two choices: or we correct our strategy to understand how to fix that restaurant, or maybe we discover that the market in this area is horrible now, and actually we are the only restaurant staying there. Everybody just left maybe a kilometer there, closer to the clubs, because there is new venue area is happening there, and we stuck in an area which were actually maybe 10 years ago in the center of attention. So we need to maybe to close that one and go and open somewhere else. So we need to shut down the EURUSD now and go to trade Tesla. You know, this is basically what we want to talk about. By that, actually, Tesla was the last trade for us today that we are gonna talk about, and if I hide that pen. And I will conclude with this. Basically, don't marry your trading instrument. It's a tool. You use it once, it's not really good. You have to dump it. You have to drop it. And if you feel that this trading strategy is suitable to you, if you feel that this is the right way, which really I recommend you to consider, feel free to click down below on the free trading course. You will learn a lot about that trading strategy, and you will understand that jargon that I'm talking about. Trend following formula is a way to scan the markets to get the best trending markets with higher probability outcome. If you like that video, guys, please give us a thumbs up. Subscribe in the channel if you haven't done so far to receive the weekly market review and the daily market review. We publish a daily market review 8 AM GMT. It will give you a really nice clue about the market, and if there is anything more we can do for you or to answer you, please hit us down below in the comments, and I'll come back to you as soon as possible. Wish you the best of the day and have a great trading week.